Hi everybody, this is the Live Market Open for February 9th. Different hour today. I'm Yochai, I'm a Forex Run Market Movers podcast, doing the show as usual for FX Street. Today, one off in a different day, a different hour, Thursday at 1 GMT, ahead of the US Open, instead of their usual Wednesday morning. Any case, we'll, as usual, cover recent developments in markets, talk about various charts and levels, our technical session covering majors, minors, crosses. We'll discuss the upcoming events. We'll have one event also during the show, the US weekly jobless claims. Our currency of the week is Euro Dollar, the world's most popular currency pair. And we'll also preview Janet Yellen's testimony, which I think is quite important, before briefing the whole week ahead and wrapping up. As always, your questions are more than welcome. If you cannot see the chat box alongside the screen, for any reason, please go to tlk.io/fxstreet-forex-live-video. That's the chat box. I will be monitoring that. So, what's going on in markets? Well, President Trump is still in the headlines. His Muslim ban is, well, specifically because of the back and forth with the various courts, and that has an impact on markets. That, of course, we're still in the first days of his presidency, 3 weeks in. And it weighs on the mood because he deals more with these kind of things and more with picking fights with other countries such as China, Japan, and Germany, and regarding devaluation. And we still don't have any fiscal stimulus plan. Okay, so these things are not what markets want to see. Markets want to see more fiscal stimulus, less trade wars. Okay, so I must say in the past few days, he has toned down a bit. He sent a nice letter to the president of China, Xi Jinping. So maybe things are going to change. We'll have to open an eye on that. The UK Parliament, they have approved their Brexit bill. That is the House of Commons. Next, it passes through the House of Lords. And that doesn't mean Article 50 is triggered, just gives the government the legal permission to do that. Of course, the House of Lords, they're not elected. They will proceed with that. I don't see any issues. In the UK Parliament, a few rebelled in the Tory party and the opposition Labour Party and voted against it, but it nevertheless passed with a big majority. Why? Because in the referendum last year on June 23rd, people voted for Brexit. Okay, so that was basically already priced into the pound and didn't have an impact. We had a mixed non-farm payrolls report on Friday. We'll talk about that soon. That was stronger job gains, which was partially expected because of ADP, and not so much wages were very disappointing. So that was left us with a mixed picture. Political events in Europe begin mattering. That's our special segment for today. The Euro dollar special focus, currency of the week, opinion polls in various countries. So it does weigh on the euro. We had last week the Bank of England a week ago, but it still has an impact. It hurt the pound at the time. The pound managed to recover. We'll talk about that a bit more in detail soon. Draghi, Mario Draghi, the president of the ECB, remained dovish despite better data. So that hurt the euro. And the Reserve Bank of Australia, which had a trade decision earlier in the week, did not rock the boat. They basically didn't change anything, and this kept the Aussie dollar bid. On the other hand, the Reserve Bank of New Zealand, they were a bit more dovish. Okay, more economists had expected the Reserve Bank of New Zealand to upgrade its forecast to even open the door for raising rates because the economy is doing better, but they remained very cautious, and that's why the Kiwi is falling. We'll look at the charts soon. Okay, a bit more about the Bank of England. So the Bank of England, it's Super Thursday last week, decided to not change interest rates. Totally expected, no surprise there. Higher growth forecasts for 2017. Also, that was basically acknowledging reality. Reality is that so far, Brexit didn't hurt the economy that much. However, they kept their inflation forecasts unchanged. By leaving inflation forecasts unchanged, they're signaling that they're not very keen to raise rates. That's what hurt the pound. Carney, the governor of the Bank of England, wants a slightly stronger pound to weaken inflation because he doesn't want to act too much. Okay, so the pound fell on inflation forecast. Since then, the weakness of the US dollar helped it recover. A bit more also about the non-farm payrolls. 227,000 jobs gained, much better than around 170 expected, but ADP was also gave us a big hint. And also we had some downward revisions worth 39,000. All in all, the situation in the United States is that we are seeing consistent job growth, but if we look at wages, they rose only 0.1%, back to 2.5 year over year. Last time we had 2.9%, okay, the highest since 2009. Not anymore. That figure for December, for the previous month, was revised to the downside. So basically, this shows us, for those following the US economy, it tells us that the US economy still gaining jobs, but there's still more to go. Because if at this point in the cycle, we should have seen more. If we're getting to full employment, what happens when there's nobody left to hire? Of course, companies hire less people but begin paying higher wages, and we're not seeing that. So the economy still has a way to go. There is still slack, as they say, in the US economy. Okay, let's get back to. Of course, that also weighs on the US dollar. Other news there, participation rate went up. That's good news, 62.9. More people are actively in the workforce. But also the U6 figure, what's also called the real unemployment rate, that's also up, and that's not good news, 9.4%. This includes people who are either too discouraged to look for a job or who are working part-time and they want to work full-time. Okay, so involuntary part-time work. The US dollar didn't really like it. It came on top of the weakness seen because of Donald Trump. And, well, we're seeing recovery attempts in general in the US dollar, but this isn't going very fast. Other figures around the world, the ISM non-manufacturing in the United States also missed, also disappointment, 54.5 points. That means the biggest sector in the United States, the services sector, is not doing so well. Jobs, another jobs figure that the Fed watches, that was actually as expected. That was for the month of December. In China, the Caixin figure, Caixin Manufacturing PMI, the independent measure of the Chinese industry, missed with 51 points, but it wasn't such a big miss. In Australia, retail sales missed, but it also wasn't such a big disappointment. Okay, so we finished up our sort of roundup of news, and now our technical segment about major pairs for the middle of February. Okay, let's go to the charts. I guess many of you are interested only in the charts. So here we are. Here we are with euro dollar, currently 106.87. Let's zoom out a bit more. 107.10, still working as some kind of resistance. Further above, we have 107.75, which worked in the past here as support. But the high level of this cycle, at least to watch, is 108.30. Okay, that's just below. If we zoom out even more, okay, that's already further behind, but well, late in 2016 and the last year, we had it at 108.70. To the downside, if we look down, we have 106.20. Okay, because this was a low point right here a week ago. Then 105.90. Sorry. 105.90, okay, which provided support right here, and then 105.20, which is a very old line, low point from 2016, and then we have 104.50, which was a swing low right here in early January, and then we have much lower 103.50, the multi-decade low, or multi-year low, I should say, 14-year low. Pound dollar. Lots of action here. Currently 125.65, just above support here at 125.40, which still separates ranges. Looking down, we have 124.15 and much lower, only there 122.50. 124.15 worked as support here. 122.50 right here in January. Looking up, Not too many lines before you reach the initial post-Brexit low. So we have this swing high here of 126.75, followed by 127.30, but the real strong line is 127.90. Okay. Dollar yen. Dollar yen is at the lows, but hesitating before lower ground. Very strong support there at 111.40, which worked as a cap for the pair in the separator of ranges, also in this cycle and also beforehand. Sort of in the middle of the range, we have there the round 112 number. Look at the strong resistance here at 112.50. Currently, we're at 112.30. Further above, some kind of resistance at 113, a round number, not that strong. Another round number is 114, and then we have 115.30. We're in a low range now in dollar yen. Dollar CAD, well, 130 is a hard nut to crack. We had a few attempts to move lower, then a big bounce to the upside, currently 131.10. 131.80, I still like this line, even though it has been broken a few times and just recently. Further above, 133, which capped the pair right here, and 134.50. Below 130, the very round number, well, before that, sorry, we have 130.80, which is clear to see how it separates ranges. 130, the round number, I would call all these attempts false breaks, and below that, 128.30. Aussie dollar, relatively stable, very strong support, as you can easily see here at 76.10, further support at 75.10, 12, something like that. And below that, we have 74.40. To the upside, we have here the 77 number. We almost touched 77 in several attempts. Anyway, currently 76.10 to 77. Further resistance at 77.40 and 78.40. Kiwi dollar fell out of love. 72.20 is the current level. Attempting there to retake the 72.30 level, which here served as in late January as support. Further above 72.65, 73.10, and 73.50. To the downside, we have 71.60, and of course the round number of 70. Dollar Swiss, almost at parity. Parity remains resistance. At least symbolic line. Remember, the Swiss National Bank intervenes here. 100.40 is the next line of resistance, followed by 101 and 101.40. To the downside, we have 98.50, and well, just above that, the 99 level, the round number. Okay, remember, this pair is prone to intervention. So this completes our major pairs for mid-February. And now let's talk about the crosses. Roundup of technical levels for crosses in mid-February. Euro Swiss, once again, Swiss National Bank intervention anyway, but we're still seeing it providing us with some nice technical behavior. Currently 106.74 resistance there at 106.80, support 106.35. Yes, not many pips here to lose or to gain. Resistance 107, 107.60. The Swiss National Bank would like to see the pair trade between 108 and 110, but they're very careful with their intervention. Euro pound, the Brexit pair, currently at 85.08, support at 85, followed by 84.65, and below that, well, levels last seen only well in December. That we're talking here about 84.20 and 83.30. To the top side, levels visited recently 85.73, 86.35, and 87.10. Okay. Currently some range trading after moving to the top side. We might see here well, some kind of a head and shoulders pattern. Euro yen, currently 120, very round number here. Resistance 120.50, 120.90, and 120.60. We fell quite a bit here on the weakness of the euro. Support at 119.35 and 118 to the downside. And now pound yen, the dragon, 141. Further resistance, 142, 144.80, 145.30, and the round number of 146. Quite a choppy pair, as always. The dragon provides us with action. Lower support, 139, 138, and 136.40. To top off our crosses, let's take a look at WTI crude oil currently. Very much in range, 52.82. Resistance, 54.50. Very strong line. The initial line after breaking above 52, and 55.20, the swing high. 52, it's not as strong as it used to be. I would say it's the center of the current range. And as much as I would like to say that 50 is a line of support, real support is only at 49.50. Lots of stability recently in oil prices as we await serious information about the implementation of OPEC, about its agreement. It seems that so far OPEC is fulfilling its commitments, okay? That means this supports oil prices. So, okay, so that concludes our roundup of crosses. And now let's talk about further events. Well, we have soon the unemployment claims. So that's coming in 15 minutes or so. We have Charlie Evans of the Chicago Fed talking later today at 6:10 GMT, and Bank of England's Mark Carney will talk at 6:30 GMT, but he spoke last week. I don't think he'll tell us anything new. Tomorrow, I would say the big event, well, we have Chinese trade balance in the middle of the night, and that will provide some action for the Australian dollar. Then in the morning, 9:30 GMT, industrial output and trade balance from the UK. It can serve as an excuse, as a trigger for some action in the pound, but the actual data will not matter that much. For those trading the Canadian dollar, it's of course a big event, the Canadian jobs report at 1:30 GMT. And last but not least, we have consumer confidence at 3 GMT, the first report actually for Trump. It serves, in theory, as an indicator of future or current retail sales of consumer spending. Not always well correlated. I think it will have more importance now as a political thing, especially because, well, Donald Trump, in December, there was a strong figure in the other consumer confidence number, the CB consumer confidence, and he said to himself, "Thank you, Donald." So this will have more political impact. Yeah, so these are the upcoming events. All in all, this week is not one of the busier weeks. It's quite light. Last week was very busy, and next week is also very busy, but this one is a bit shallow. Okay, now it's time for our currency of the week, Euro Dollar, the world's most popular currency pair. It has been moving against the trend. We're seeing a trend of a weaker dollar, not in the euro. The euro has shown some weakness of its own. We'll cover the different aspects, what's moving the euro, what's moving the dollar, and what's next. So I see euro dollar as range bound. All in all, it fell. This is a chart. Well, actually, it's similar levels. This is a snapshot I took earlier, but as you can see, we fell. This is a daily chart. We fell to those lows late in 2016, early in 2017, 103.50. Since then, moving up, but more or less range bound. We haven't broken above that 108.70 high seen in late December, and it's a very, very moderate move to the upside, okay? So here we are with euro dollar. What's going on? Let's talk about the good things about the European economy. So we'll do the good, bad, and the ugly. So last week we had quite a few figures. Inflation is up to 1.8%. That is within the ECB's mandate. Remember, the European Central Bank, the biggest mover of the euro, always has one mandate, one needle in its compass. That is inflation, headline inflation, not core inflation. So headline inflation should be 2% or a bit below. I would say 1.8 is a bit below. So finally, after a long period of low inflation, they reached their target. Okay, so that's good news. The unemployment rate is lower. So, well, yeah, I live here in Barcelona, Spain, Catalonia, and we're seeing really the economy is picking up, and people have more jobs are offered. Growth is picking up at 0.5% in Q4. Actually, it's even higher than in the United States. Remember, Europe publishes quarter-over-quarter figures, and the United States publishes annualized numbers. Okay. Now let's talk about the bad. Well, core inflation, if you exclude oil prices, it's only 0.9%. So it did move up from 0.8% after 5 consecutive months, but it's not going anywhere fast. Okay, so this tells us that, as the ECB tells us, as this man here, Mario Draghi, tells us, that it's all related to oil prices. Oil prices push inflation lower. Oil prices are pushing inflation higher, and that is it. The unemployment rate, I talked about it as a positive thing, but 9.6% is no fun. It used to be 11, 12, but so things are improving, but it's not that we're on supersonic growth, okay? The ECB, Mario Draghi here, European Central Bank, still dovish. They want sustainability with everything. Sustainable higher inflation, sustainable growth, and a sustainable fall in employment. And something they will not say, they want a weaker euro, which supports higher inflation, which supports exports. And with governments not doing enough, they need a bit more help from a weaker euro. So that weighs on the euro. So we had the good, the bad, and now the ugly. So so it's basically politics. Here are some leaders of Europe's extreme right parties. In the middle there, it's Geert Wilders. I don't know if I'm pronouncing his name correctly. He's the leader of the Dutch Freedom Party. To his right is Marine Le Pen, the leader of the Front National in France. And there on the left, we have Frauke Petry, the leader of Alternative für Deutschland, the far-right German party. In these three countries, Netherlands first, then France, then Germany, we have elections. And Frexit, French exit from the Eurozone, is an option. So let's look at the European calendar, and it is becoming closer and it is becoming substantial in the movements of the euro. So on March 15th, that's only 5 weeks from now, more or less, we have elections in the Netherlands. So it's not the biggest country in the Eurozone, of course, but it's sort of, it could be the canary in the coal mine. Now, there will be some kind of grand coalition between center-left and center-right parties, and they leave the Freedom Party out. But if they come out as the biggest party, it will certainly be worrying. Okay, if they're anti-immigration, anti-establishment, anti-everything. The biggest event is the elections in France, the second largest economy, presidential elections in 2 rounds. These 2 rounds are very important. April 23rd, all the candidates French can vote for any one of all the candidates, and on May 7th, there's a runoff between first and second place, okay? We'll dive into that a bit more. September 24th, elections in Germany. At the moment, a bit far off, but once France is cleared, Germany will come into the spotlight, and opinion polls in Germany already have some impact, okay? Other events, tentative. Here where I'm sitting, there might be a referendum about Catalan independence, official or unofficial, probably unofficial and unbinding in September. It'll cause a lot of tension. And maybe in Italy, elections, maybe in September, maybe earlier, maybe later, it's an open question. We had in early December 2016, we had a referendum in which Prime Minister at the time, Renzi, failed to pass. He was rejected. He got only 40% of the vote instead of, well, and 60% against him, which is quite a defeat. So lots of interesting political events in the Eurozone. Specifically France, that's the biggest event. France is a core country. There is no euro without France. You can imagine the euro without Greece. the euro without another relatively small country like Malta, like Latvia. Not trying to offend anybody, but it's hard to see country in the middle of Europe, the second largest economy, the Paris-Berlin axis, the core of the core. If France leaves, there is no euro. Le Pen, here in the picture, she wants a referendum on Frexit. She leads first round polls, okay, but she has something like 25% of the vote, which means there will be a second round. The two-round system should ensure that we'll have in France another president, but who knows? Who can be the other president? Here we have sort of three leading candidates. So center-right candidate, François Fillon, he's on the right, okay? It's the party of Sarkozy, the party earlier of de Gaulle. He was the leading candidate. Sort of, he was a former prime minister, but now he's embroiled in a scandal called Penelope Gate. Basically, he paid his wife to work for him, and she didn't do any work. So that's a scandal in France, or worse scandals in other countries. But anyway, he's in trouble and he's losing ground. That paves the way for the one here in the middle, Emmanuel Macron, former socialist, former minister in current President Hollande's government, and he has rising chances. He's 39 years old, he's charismatic, he's very, very centrist, European. He's currently the leading candidate to meet Le Pen in the second round, and he would be very, very favored by markets, okay? I mean, markets maybe prefer center-right, but he would be the second choice. And the guy here on the left, his name is Benoît Hamon. He is the leader now of the Socialist Party, Socialist center-left, but he took them to the hard left. He wants taxes on robots to reduce the working week. Markets would not like him to win, but if it's Marine Le Pen against, hard left against hard right, well, I guess they would prefer hard left, but who knows? He has much lower chances. It's basically who will get to the second round with Marine Le Pen, either François Fillon, if he recovers, center-right, or centrist Emmanuel Macron, which is currently leading, but everything is very, very close. And opinion polls may not necessarily come out as we expect, as we all know. In Germany, it's a tighter race for a change. Angela Merkel, here on the right, she wants a fourth term. She's considered all over the world as the anchor of stability, soft-spoken, has lots of experience, of course. She's the leader of Germany since 2005. Moves according to opinion polls many times. She's not hard right. She's very, very centrist. But for change, she has some challenge from the Socialist Party, from the center left. This guy here, Martin Schulz, formerly the Speaker of the European Parliament, sort of an outsider. He wasn't in her government like the current leader Sigmar Gabriel, and he's currently leading the polls, okay? But things will change many times. Again, we probably will have a center-left, center-right government, so it's not such a big deal. The bigger deal is Alternative für Deutschland, extreme right party, began only as talking about economics, but now has adopted an anti-migrant sentiment, anti-Euro, anti-establishment. So they won some regional elections, and it is a cause of worry. But at the moment, there is a bigger chance that Le Pen will become president of France than that Alternative für Deutschland, AfD, will have some real power. Okay. Yeah, so what does it mean for the euro? Okay, I can talk for hours about politics, but we're talking about Forex, of course. And we have the euro is becoming more sensitive to political news. That is why the euro is a bit lower in recent days. So moving against the trend, euro dollar is falling, and that is not natural, okay? I mean, if you look at pound dollar, dollar yen, other currencies. So the euro is becoming more sensitive to political news. We've seen 2016 how politics had a big impact, Brexit, Trump. France, again, is the most important country. Big events are, the elections are at the end of April, beginning of May. But in March, we'll have sort of an indicator from the Netherlands. After May, after the French elections, it's Germany in the focus. But again, Italy could still steal the headline, and also Catalonia here, outside chance, but you never know. Okay. Talking about euro dollar, we should talk a bit about the dollar as well. Trump, Donald Trump here, does not know if he wants a strong or a weak dollar. According to some reports, he called his security advisor, not economics advisor, to ask what is better, and he got a response that it's not the field of expertise. So far, we're seeing Donald disillusion, more trade issues, less fiscal stimulus. Markets do not like that, okay? We've seen the dollar rally hard since the elections, but now there is a setback. It's not, I wouldn't say it's a collapse of the dollar. It's just a slide or a slight disappointment. The full judgment will come after 100 days. It means around the end of April, around the French elections, okay? So also this period of Trump coincides with the French elections. So euro dollar will become very interesting around the end of April. I think it's already interesting. The economy and the Fed, we're talking about everything looks okay. Talked about the non-farm payrolls earlier, growth, but not exciting. Mediocre, steady, boring growth, frustrating. No recession, which is good, but no animal spirits, okay? Politics for now lead. So the Fed reacts to Trump. Economic indicators play second fiddle to Trump. Trump leads, the rest follow in terms of impact on the US dollar. All in all, euro dollar, if we conclude this segment, the chance for parity is probably missed, probably gone. I would blame Trump for that he didn't, he began disappointing even during the transition, but also in his first days, didn't provide the fiscal stimulus that could have pushed euro dollar to parity, that could have pushed the dollar higher across the board, okay? On the other hand, we have some political worries pushing the euro down. And of course, the Donald disappointment, full disappointment, we currently have the beginning of it, could push the dollar down. I would say that the downside bias that we had through the end of 2016 and also the beginning of 2017 is gone. Currently, it's quite neutral, waiting for political developments more than anything else, okay? So I find it hard to see euro-dollar parity. I would say neutral is the current situation. Let's look at the chart to conclude this special segment about euro-dollar. Let's zoom out to the daily chart to get the bigger picture. So currently 106.80 at the time of the show, 107.10, 107.75, 108.30, the 2017 high so far, which is not that far from where we are, 108.70. Above that, we have, of course, the round number of 110 and 113, the level we've seen on election night in the US. Looking down, we have 105.90, 105.20, 104.50. It replaces the veteran 104.60 line, and then 103.50. If I'm totally wrong, and we do have an assault on parity, the only line between the recent low of 103.50 and parity is 101.50, a line from 2002. Yes, that was 15 years ago. Okay, so these are the lines to watch on euro dollar. Came quite a way, currently bounced off, if you look at the bigger picture, bounced off low levels. Okay. Now let's continue with next segment, a preview for Yellen's testimony. The chair of the Federal Reserve, Janet Yellen, will testify on Valentine's Day. It's Tuesday at 3 GMT. So why is this important? It's more important than the rate decision because, first of all, we didn't get anything, and the rate decision on February 1st was the rate decision without a press conference from Yellen, without new forecasts, okay? It's the first appearance before the new administration, the new composition of Congress. Sure, many people there are people who know her and she knows them, but some are new and it's under the new president, of course. And since her last testimony back in December 2016, or press conference around the same time, December 2016. There is lots of data to digest, okay? So that happens Tuesday at 3 GMT. What will she say? Well, central banks try not to say anything, central bankers, and Yellen is no different, okay? She will probably cement a no hike in March. She will be dovish enough to signal what we probably already know, that the Federal Reserve will not raise rates in March, and the next meeting, which is also a big meeting with the press conference and new forecasts. She will use the phrase data dependent, of course. The Fed reacts to the data as we go forward. Going forward, another key phrase. And she will be asked on fiscal policy. And she'll probably dodge these questions because that's in the realm of politics, of not her field, okay? But basically, she'll give us the basics that if we have more stimulus from the government, from the Trump administration, that means more tightening. She'll probably make this link, okay? More rate hikes if government spends more and pushes inflation higher. Less means less, of course. We will also see questions. I will be looking for, how does the Fed see wage development? Wages, salaries, money in people's pockets, that's what makes the difference. Key difference between inflation that is due to energy prices or things like that, temporary, or that people really have more money and they push all prices higher. She'll be asked also on impact of trade changes, dodging these questions, and impact of deregulation, probably also dodging these political questions. But these are things that she'll be asked about. These are political things, and of course they impact the Fed, and maybe more in the long term. But Yellen and her colleagues will try to avoid politics, doing their best. Big question, how will the dollar move? It depends on how confident about the economy is Yellen, or maybe she's still not sure about the hikes, okay? Dovish or hawkish, okay? Basically, if she's more confident about the economy, there are higher chances of a rate hike. We've seen her express confidence about rate hikes, about the economy. But since then, we had more data, such as the NFP with the wages. So markets are now pricing in one hike in June and another in December, and even three, according if you listen to the Fed, if you listen to the dot plot. So that means June, September, and December. But markets are more skeptical. If she is more confident, there are higher chances of a hike in June, and then one in December, even another one in September. But if she shows lower confidence, worries about wages, things like that, dovish Fed, that means 2 hikes or even less, means some doubts about June as well. June is still far, of course, but markets are looking at that as well. What should we look out for in terms of timing, market movements? Remember, the Fed publishes the statement just as Yellen sits down, more or less, at 3 GMT. She might be still waiting. Congress might still be waiting. They might have some kind of a delay, but the statement goes out at 3 GMT. Then, probably a few minutes after 3 GMT, she actually reads the statement. I would expect the first move to come when the statement is released and not while she talks. But after she finishes talking, reading out her prepared statement, she begins the questions and answers session, okay? It could last up to 6 hours and could be very boring. The first minutes or first half an hour is more important because that's when headlines could come out. Now, also on Wednesday, also on February 15th, there is another Q&A session. At the beginning, she'll repeat the statement and then get asked more questions and maybe provide more headlines. But as always, the fresher data is more important. Tuesday is the big day. Tuesday, 3 GMT is the most important time. Okay, so that's a preview of Janet Yellen's speech, testimony, which is, I think, a very important event for markets, for the US dollar, because, well, of course, the politics lead and the Fed lags, but the reaction of the Fed to politics is key. Here is Donald and the dollar. Okay, and now we've reached the preview for next week's events. As I said, it's much busier, beginning already on Monday. with Japanese GDP early in the Asian session. On Tuesday, quite a busy day. It's the day that Yellen speaks. We previewed that. More confidence means stronger dollar, more confidence about the economy, about rate hikes, about wages. Less confidence, more worries, more wait and see, more data-dependent, 2 hikes or less, weaker dollar. Okay, but before that, we have German GDP, Eurozone GDP. We had some GDP figures from the Eurozone, but with Germany, the picture, of course, will be much more complete. We have the inflation report from the UK. Inflation is moving higher because of the weaker pound. And we have producer prices from the US, totally overshadowed by Yellen. On Wednesday, we have the UK jobs report. Last time we had a very welcome and surprising drop in jobless claims after a few worrying months. Let's see if this persists. We have US retail sales, very, very important. By this time, the Yellen effect might be over, maybe not, but retail sales, of course, consumption is key to the US economy. And at the same time, we have also US inflation. So blockbuster top-tier US figures on Wednesday. And Yellen again. So also Wednesday is a very, very busy day for the US dollar. On Thursday, the Australian jobs report for those trading the the Aussie in the middle of the night. And quite a few figures from the US, but they might go in different directions. They might offset each other. Building permits, housing starts, the Philly Fed manufacturing index, and jobless claims like we had today. By the way, today it came out better than expected, 234,000. I saw that while I was speaking, but I thought not such a big surprise. So worth stopping the show. Anyway, in New Zealand, retail sales also on Thursday next week. So quite a few events on Thursday, and then Friday, relatively quiet day with the retail sales report from the United Kingdom. Of course, important for the pound, but apart from that, the end of the week, the close, the US session is quiet. So that's a preview for the week of February 13th to February 17th. All right, so see no questions. Time to wrap up the show. So this is the wrap up for the live market open. Oh, it's the live American Open for change, February 9th. Main events in markets are that Trump still continues weighing on markets. For markets, there's no fiscal stimulus, more picking wars with everybody, picking fights, Twitter fights. The Muslim ban still in the courts, fighting with judges. You name it, trade things. We might begin seeing some improvement, some nice letter to China, but all in all, the dollar is a bit on the back foot. Attempts to recover are limited. The UK Parliament approves the Brexit bill. It still goes through the House of Lords, and then the actual triggering will probably happen on March 9th. That will hurt the pound. Well, probably. The mixed non-farm payrolls, low wages, more or less weighed on the US dollar. Not such good news. Political events in Europe matter. We had a special segment about euro-dollar and a big focus on European politics. The Bank of England does not lift inflation forecast. This hurt the pound, which recovered, and Draghi joined in with politics to weigh on the euro. Big events. Yeah, talked about this, and yeah, wages weigh on the dollar. Other figures, yeah. Let's just look at the charts during this quick wrap up. So euro dollar sort of this week stands out with weakness. Resistance 107.10, 107.75, 108.30. Support down there at 106.20, 105.90, and 105.20. Pound dollar 125.63. Resistance at 126.75, 127.30, and 127.90. Support 125.40, 114.15, and 122.50. Dollar yen found their strong support 111.40, currently getting closer to resistance at 112.50, followed by 113, 114. To the downside, we have 112 and 111.40. Dollar CAD 131 and change, support 130.80, resistance 131.80, 133. To the downside, we have 130. Aussie dollar very much likes the 76 handle. 76.10 and to 77 is the current range. Further resistance 77.40, 78.40, and support at 75.12. And the Kiwi also stood out with the fall because of a dovish rate decision in New Zealand. Currently 72.20, resistance 72.30, 72.65, 73.15, 73.50, support 71.80 and 71.40. Okay, all in all, coming up this week, we have current figures didn't have much of an impact. Tomorrow, for those trading the Aussie, watch out for Chinese trade balance. For those trading the pound, look out for the trade balance. Well, also trade balance. In Canada, it's jobs day, very important for those trading the loonie. And we'll have the final touch of the week. Maybe the most important figure for a relatively light week is the US consumer confidence, the first figure from the University of Michigan and Reuters after Trump entered the White House. Okay, so that's it for the show. For those watching it or for those uncomfortable with the hour, don't worry, we'll be back next week at Wednesday at 8 GMT. Thank you everybody for watching. As usual, you can see the video clips on fxtree.com and later on forexcrunch.com. And that's it. Wish everybody safe and successful trading, and see you all next week. Thank you and bye-bye.